The yield curve just inverted again. February 2025. The Fed's favorite recession indicator is flashing red. This time it might be right. Let me explain. When short-term Treasury rates rise above long-term rates, that's called an inverted yield curve. Historically, it predicted every recession since 1969, only missing once in 1966. The curve inverted back in October 2022. Everyone said recession was coming. It never arrived, so people stopped believing the indicator. They said maybe it's broken, maybe this time is different. But here's what's being missed. The curve inverted, stayed inverted for 27 months, then uninverted in December. Now it inverted again. That's not normal. It's terrifying because historically, when the curve uninverts after a long inversion, recession follows within 6 months. The New York Fed tracks this. Right now they assign a 29% probability of recession by June 2026. It might not sound high, but it was only 8% 3 months ago. It's tripling. There's a pattern ignored. The last 4 times the curve uninverted, recession started on average 6 months later. We uninverted in December. 6 months from December is June 2026. I think it comes sooner because of current events. Trump's tariffs are slamming the economy. Consumer confidence hit recession levels. The Conference Board's expectations index collapsed. University of Michigan sentiment survey shows people expect inflation over 5% for the next 5 years, highest since 1995. That mix is deadly. High inflation expectations plus economic slowdown equals stagflation. The Fed can't fix stagflation. Cut rates, inflation worsens. Keep rates high, economy crashes. Here's my take. The yield curve was right all along. It predicted recession in 2022. The recession was delayed by massive government spending and pandemic savings. Those buffers are gone. Savings depleted. Government fighting over funding. Tariffs hitting. The yield curve is screaming again? Markets are listening, pricing in rate cuts, expecting the Fed to panic when growth turns negative. By the time the Fed cuts, it'll be too late. The recession will be here. If invested in growth stocks, rethink. If sitting in cash, move into safer assets. If thinking this is another false alarm like 2022, look at the data. This time is different and in a bad way. The yield curve inverted, uninverted, now inverted again. This is not a broken indicator. Recession was postponed, now arriving. June 2026. Maybe sooner.